Thank you for joining us. I'm Juan, lead trader and founder of ProsperiTrade. In this video, I just want to kind of discuss the little bit of back and forth between Tom Nash and the traveling trader on ticker symbol PLTR, which is Palantir. If you click the link above, I did a video on Palantir, and during my research on the company, I found that there's so many opinions on it, and they're so divided. There's no consensus like Amazon or Microsoft or Tesla. Some analysts just constantly state that it's overrated, it's overpriced, overvalued, and that it's due for a correction. And there was a correction. There was a lot of hype. It did hype up quick when we were in a super bull market and all the SPACs were taking off. But it's a long-term game. It's a marathon. So how does it look for the long term? And then some analysts just say that they are going to revolutionize information, and they're going to take over their industry, and they're going to be everywhere. So there's a major division. So we're just going to watch a few clips on kind of like the back and forth, and we're going to give our comments and opinions on it.
Massive bearish head and shoulders pattern that you see here on the 1 day, and it is currently confirmed because it broke below the neckline. We saw the same thing on Peloton as well. A ton of.
So this is the first thing I noticed. So when he's talking about his video, he's getting into technical analysis, and coming from day trading and trading options and swing trading. That was my initial background. That's what I did for about 7 years, and I still do. I still take the occasional swing trade, occasional day trade, and you can see some of that in my videos. But it's all about the investment, the long term. Most investors don't really care about chart patterns. If you believe in a company and you think in the long term they're going to be great at what they do, they're going to be around for the next 5-10 years. You look at some companies like DXEH, I believe that's the company, where they were trading $10, $11, $12, and they got up to as high as 400, and this is in the span of a decade. So if you believe in a company, if you believe in their product, and you believe that they're going to be around for a long time, you don't really care much about technical analysis.
Videos projecting Palantir to be $1 trillion company. Some projecting that Palantir has a 22x upside or a 25x upside. And really, I don't know if this is just to try to drive traffic to their YouTube channels. And it's clear that they're just parroting each other and maybe riding some of the bullishness that Cathie Wood sees on Palantir. A lot of it is incentive driven too. That's just how the YouTube algorithm works. If they see that somebody got a ton of views saying that Palantir is going to 25x, that would obviously incentivize other YouTubers to do it. So I'm not sure company. Now, in full disclosure.
So, two things with that. He's right about Cathie Woods. Everybody's really, Cathie Woods, anything Cathie Woods invest in, people are going to look into it. She had a super hot year, and this year is not as hot. So that brings me to another point, though. I was talking to an investor, and I was telling him, this quarter, I've had a pretty bad quarter. A lot of the stocks that I'm invested in, they're not doing as great, and it's a lot because of the macro. But he told me, wait till you have a bad year, and that's just the investing game. It's sometimes you invest in a stock. And if you believe in it and you're willing to hold it and you're not going to be shaken out when it drops and it corrects 10, 20, 30, 50, 60, 70%, if you're willing to hold on, then in the long term, it's going to pay off. And you even see that sometimes with options, sometimes those short-term options, because of time decay, people lose money. And sometimes it's better to sell options or to buy a leap. So his point, though, about the YouTube and following what's hot. Yeah, I mean, people do that. That's why we create thumbnails. That's why we do all these things. We want to get traffic. We want to be monetized. We want to make money on YouTube. But he's criticizing or pointing out that maybe these people are riding the Palantir train while talking about Palantir, which is kind of like a contradiction.
I currently have some Palantir cash secured puts open, and we'll talk about Palantir trades in a second, as I promised you. But here are some of the harsh truths about Palantir. Palantir is not a new company. Yes, it recently IPO'd last year, but it has been in business for 2 decades, 20 years, and it has never turned a profit. Now, it doesn't mean that there isn't a market for Palantir's big data platforms. As a matter of fact, it continues to sign new contracts both in the public and private space. However, the reason that it isn't profitable yet is because their products are hard to scale. They are bespoke for every single customer, meaning
Okay, so that point, there's two things there. The first point about pointing out how long they've been in business and they're not profitable, I don't agree with him on that. And Tom Nash actually rebuttals that. And like, but the second point, I kind of agree as far as, that it can't be sold everywhere. And Tom Nash, this is probably one of the few points, the only point that I really disagree with Tom Nash slightly. So, I think what he's trying to say that Palantir is not Microsoft. Like you can't buy the product and install it at home. And if you kind of look at even on their website, if you look on their website, like talking about partnering, they ask you, the question is how does Palantir market my solution to its customers? So they mentioned that there's cross training. They have to send their engineers out there. There is kind of a process, in even Tom Nash brought up Airbus. Yes, but there had to be some consultations. Their engineers went there. They see their need. It's not just here's the product, install and go. I think if they can do something like that, that would be also major. That they'll be able to capture a lot different part of the market. Yeah, and their COO, he said it during an interview that there's a three-step process. They go to the company, they install their software, they find the need for the company, they install their software, and that part is free. They don't charge, and they make money as they scale up and do different things. It's kind of like a three-step process. So that's kind of like the only part I kind of agree. Um, but as far as them being 17 years and that doesn't make his point. They've 17 years. They've been working with the government. They've been researching. They've been perfecting their craft, and that was kind of like the point that Tom Nash made, which I definitely agree with.
They are custom made and unique for every single customer. That is summary. The discounted cash flow model tries to determine a current value based on a company or an investment's ability to generate future cash flows.
Okay, so this is the part where he kind of just chose. Obviously, if they don't have enough free cash flow, you can't do a DCF, a proper DCF. But for example, so this is just an example, a DCF I have here on the next video coming up. It's ticker symbol SMTI. You can do the base case, right, which is with the numbers that you have right now. So the numbers that I have right now for this company, they're not going to be profitable until 2018. But this is just the base. If I put in, for example, my bullish case based off of potential clients that they have, based off of business that they acquired. So like this company, they were marketing to 200 something plus hospitals, and at their base case, here, the potential upside was 23%. Okay, but if that businesses that they should start marketing to 200 something plus hospitals. So if this is the base case, they're 23% upside with what they have now. They've doubled in business. So next year, based off that business, and if they continue to grow, my bullish case would be that there's a $70 intrinsic possible value with 167% upside. So you can have kind of a DCF with potential business. And the DCF that he actually used was kind of like a computer generated one, and it's those aren't as accurate, I found.
So dollars. I would much rather take that number when I'm looking to invest in a company that has yet to be profitable after 20 years, even if I'm still bullish on its future. All right, so with that said, and our conservative valuation in mind, I do believe that there is a space to trade Palantir here. The easiest one that we'll get out of the way is obviously you can dollar cost average or just buy Palantir shares here at under $20. Now, portfolio distribution is key. So an unproven stock like Palantir, you do not want to make that 50% of your portfolio. This is just me talking. You can do what you like. Now,
So that was his case. Then he talked about selling calls, I believe, or selling puts, covered calls, which is great strategy. I mean, they have high success rate. I definitely recommend selling calls especially if you have the stock and it's not a naked position. But it doesn't address, the long-term thesis. When Kathy Woods, quoting Kathy Woods that he did, when she first gave her insight or thesis for Tesla, they kind of mocked her. And when Tesla met what she quoted, she gave another. I think she gave an argument of a 2,500 bullish argument. But it's what investors do. They read their data and they extrapolate the business that they're getting into, the market, and they give these evaluations of what they think the company is going to be worth. It's just how long-term investing works. So for him to kind of like dissect what Tom Nash's thesis is but using options and short-term trading and just not a long-term thesis, it's kind of a weak argument, in my opinion. So here's Tom Nash, kind of his rebuttal to the video.
Facebook, Google level company to reach $1 trillion. And here's where we completely disagree. While he can't see it, I absolutely see it. And in my videos, I laid out the game plan of how I think Palantir will achieve exactly that.
Berkshire Hathaway stock is over $400,000 a share.
And then let you draw. It's just a function of how many shares you have outstanding. I can issue one share on the $1 billion company.
Market capitalization, or market cap, is simply the amount of money that investors have given to a company through the price of their shares. You find out the market cap by taking the number of outstanding shares and multiplying that number by the current price of the stock. So if there were 1 billion shares of the stock to trade and it was trading for $10 a share, the market cap of that company would be $10 billion.
Yeah, so this is kind of Tom Nash brought that point up, and he was really nice about it. But the traveling trader brought up that Berkshire is trading at 400 something plus thousand, and they're not a $1 trillion company. Well, one has nothing to do with the other. I mean, in his same argument, then why are those $1 trillion companies that he mentioned trading less than Berkshire? So I think that again, it shows that as far as his long-term knowledge, I think he's a little bit limited in long-term investing and those kind of evaluations. And he's probably an excellent option trader. Anybody who's proficient in covered calls, I think they're good to follow. They got high probability. So as far as long-term investing, I think he's a little bit off on some of his points.
Whitford. They just spent running a marathon while everyone else is running a sprint. They spent 17 years getting money, endless money from the DoD to develop a behemoth of a software unrivaled to anything the commercial sector has right now. And now after 17 come here, which...
So this was kind of his rebuttal for the traveling trader saying that they've been around for 17 years and haven't been profitable. Tom Nash's point was like, that's a good thing. Now they're ready to attack the market. They have a head start. He's going to get into the numbers. And real quick, just to kind of recap what he's going to say that traveling trader said that they've never been profitable. But actually, that's not true, because in 2020, they were profitable, but they decided to invest back in the employees. They gave a large amount, over $1 billion of stock-based compensation. So, that is profitable. I mean, accounting standards, yes, you're not profitable, but you invested back in the employees, you paid stock-based compensation.
neutralizes this 1.3 billion, which are accounting number. Net income, 100 million in 2020. So it's net income positive, 200 million. So claiming that it's not profitable for 17 years is partially true, because for the most part, it wasn't, because they were playing a marathon game. But in 2020, even before they roll out Foundry, they're still rolling it out right now. It's still a soft launch. They already made 200 million. Now 470 million, 600,000 shares. Oh, hold up a second, Sport. Let me explain a few things. You got to have context here. First of all, when you're talking about 417 million,
so at this point, he's talking about the traveling trader brought up about all the inside selling. And this is Tom Nash's kind of rebuttal to the inside selling claims.
Of dollars being sold in a year. We're talking about 1% of this company. This is a $40 billion company. That's 1% of the company being involved in insider selling. That's not a whole lot. Now,
Most insiders of successful companies are buying back stock. Why is Palantir actually selling their stock here?
as far as this argument, I really want to emphasize this. You have to understand what share repurchases mean. When somebody purchases back their own shares, it's great short term. You're getting a boost at your share price. For options traders, for swing traders, that is insane. That's great. That's why he loved that so much. However, for long-term investors,
So again, this is kind of that's one of the final points. He brought up a lot of good points. I think what we get from this is Palantir is just that stock that is going to be debated, and we're never going to know who's right until 5 years from now. So right now it came up because they had earnings. It dropped, but I just saw it spike back up to the 20s. It dipped really, really low. So this is just kind of like a brief lesson of a swing trader mentality versus an investor. I'm not saying one is better than the other. I personally partake in all three. I day trade, invest, I buy options. But I think in this one, Tom Nash, obviously he has his thesis and he has his points. The traveling trader is thinking short term with Palantir. If Palantir is able to accomplish what they're setting out to accomplish, and I think if they can make their product for just the average consumer, they're going to be like the next Microsoft. Microsoft software is everywhere. So I'm bullish on Palantir. I made a video on Palantir. I'm not biased towards Tom because I'm bullish towards Palantir. I'm biased because he was right. He's long-term investment, and I agree with his thesis. And, I want to just thank you guys if you listened on this long, thank you for joining us. Please check out some of our other videos and hit the subscribe, like, and comment. Thank you.